please join me in welcoming Lindsay. Thank you.
Oh, thank you.
Following you over here.
Thank you.
Button on the
On the right, okay. So Robert, I'm usually good for a question, but I'm still freaked out by the water IoT, the future there. We've had an extremely challenging few years in the cyber insurance marketplace, and it's finally stabilizing. I'm getting ahead of myself here, but I kind of wonder sometimes what the next challenge is going to be, and that seems to be one of them. I don't know. There we go. Okay. So I will be talking today about basically the things that you can do to make yourself most attractive to the cyber insurance marketplace to ensure that you are qualified and capable of securing the best insurance program possible at the best premium, retention, et cetera. But first I wanted to talk about what cyber insurance is. It's kind of a sexy name, but it's basically for security and privacy. And it protects all of your data, whether it's in a digital format or physical copies. So if there's someone from HR that leaves a paper file somewhere, and there's, PHI, PII, personally identifiable information there, that could trigger your cyber insurance policy. So I just think it's important to know that the policies follow your data. There are 3 core components of coverage. The first is third party, which means another entity that you either owe money to or that they are seeking funds from you. So the types of coverage there are privacy and data breach liability, as well as network security liability. So you pass malware on to another organization, they sue you, the policy responds. You lose PII, right? And then there's allegations or lawsuits brought against you, the policy responds. There's a lot of regulatory, there are a lot of regulations, both federally, state, GDPR, if you're operating in other countries, the policies are designed to respond to those claims as well. And then Pci and media liability are kind of 2 things that we don't talk about much. I won't bore you with here, but they are core components of the coverage as well. Event management are all of the expenses that you would incur at the initial realization of an incident occurring. So there's a bad actor in your system, you have a ransomware event and you're shut down. The first call that you should make is to your insurance carrier, so I appreciated that plug for a couple of reasons. One, some cyber insurance policies dictate which vendors you're permitted to use to qualify for coverage. So if you go rogue and choose a forensic investigator that your brother-in-law works for, chances are good that that claim will be denied, and it could actually result in all of the event management costs being declined. So it's important to call your cyber insurer, one, to make sure that the costs that you incur in managing that event are covered, but 2, because they'll actually help you coordinate those things, right? So again, maybe somebody's brother-in-law, I'm sure there are brother-in-laws, right, that work at forensic investigative firms. But anyways, there are different firms that are best suited for specific types of incidents. So your cyber insurance carrier will help you determine what's going on and which vendor is best suited to assist you. First party legal, so again, I talked about legal fees if you owe or if there's an allegation brought against you from another party, but in the event of an incident, you yourselves have legal obligations, right? So if you have PII that's lost and you ensure that you follow the regulations associated with notification, credit monitoring, et cetera, chances are good that you're going to avoid that lawsuit. So it's in the best interest of the insurer to help you manage the event, as well as possible as it occurs. Again, if you have to notify individuals, provide credit monitoring, et cetera, those costs are covered, and then PR costs as well. So we joked earlier that if somebody has an incident, right, that's not usually public, but in the event that it does become public, you can also employ a PR firm to help you with the communications around an incident. And then the third category of coverage is everything else that's first party in nature. So the actual payment of an extortion demand, the insurance policies pay those. To restore your assets or data recovery, that's covered. Business interruption and extra expense. So if you suffer an outage, again, 6 hours is outstanding. I think the average downtime from a ransomware incident is around 2 weeks. So the the income loss associated from that downtime of 2 weeks would be covered by an insurance policy, as well as what we call extra expense. So say you bring in contractors to help get you up and running faster, but you're then paying them time and overtime, time and a half. Those extra costs would also be covered. Something that I had not planned on talking about, and I need to add a slide to this presentation, is to also think about the additional services that you get from your insurance policy before an incident occurs. There are tabletops available. If you're paying a certain premium with certain carriers, they'll give you a tabletop annually for no additional cost. Maybe you're not hitting that premium threshold, but there's still a discount available. There may be discounts available on other services that you're already using. So I would and most insurers are not using those resources. These insurers are deploying teams of people just waiting to be called, and we're not using them. So I think certainly Cisco, Rockwell, there's a lot of organizations that can provide services above and beyond what you're able to qualify for from an insurance carrier. But I would certainly encourage you to look at your policy, call your broker, and find out what services are available to you through your policy outside of event management. Okay, that was a very quick overview of what cyber insurance provides. The market conditions, like I said, over the past about 2 years have been extremely challenging. But before that, we were the life of the insurance party. Cyber insurance has been available in some form or fashion for 15, 20 years, but it really became known as a product called cyber around 2015. That's when insurers identified this as a growth opportunity, and they flooded the marketplace with capacity. So I believe currently there's, 50 or 60 cyber insurers in the US marketplace currently, and they were pumping capacity, which drove prices to absurdly low levels. And then to try to capture and retain market share, they started adding coverage. So we were securing more and more coverage year over year for lower and lower premiums, which we all knew wasn't sustainable, but it's a free market, and that was just kind of how things worked, right? I wouldn't be doing my job for my client if I wasn't trying to get them the best coverage at the best price. So we all knew, right, that wasn't sustainable. At some point, that party would end, and then ransomware completely exploded in 2020 and forced insurers to make really dramatic changes to maintain the viability of this product. Insurers' combined loss ratios were well over 100%, meaning that for every dollar of premium they were receiving, they were paying out like $1.10 in losses. So they truly couldn't afford to continue operating the way they were. And the changes came frequently. It was basically, it was extremely volatile. The marketplace changed on a weekly basis throughout 2021. It finally stabilized towards the end of last year, but we're still seeing pretty dramatic changes from what had occurred, what was available in 2020. So essentially, the insurers pulled every lever available to them to stop the flow of funds out. So they increased retentions, they dramatically increased premiums, they increased underwriting scrutiny, which is really the point or the main focus of what we'll talk about in a couple of minutes. And then they reduced coverage. So if you were lacking critical controls, they would pull back ransomware, they would pull back that first party. So all of a sudden you're paying more premium, retaining more risk yourselves, and getting less coverage, which is certainly not what any of us are hoping to achieve. So like I said, in 2021, it was extremely volatile. We finally started to see some stabilization towards the end of last year, but then we had to get through the first quarter of this year to really kind of finish that cycle. So this is an illustration of where we are, or I guess where we were probably through the first half of this year. I have some feelings now that quarter three has ended I can share. But essentially, I think of this now as a tale of two cities. There are organizations that have heard the gospel, that have implemented the controls, that have the cybersecurity roadmap that's comprehensive in nature, right? And now we're able to secure even premium reductions. I don't want to promise anything to anyone here that works with Marsh, but we're seeing a flattening of the premium expectation for them. We're able to improve coverage where it had previously been restricted. So the organizations that are fulfilling their underwriting, requirements, are seeing the market stabilize and even improve for them. On the other hand, organizations that haven't made those investments or weren't in the risk marketplace to begin with and aren't aware of the expectations, they're struggling to get coverage at all. Especially organizations that have been in the marketplace and maybe haven't made those investments, we're still able to leverage the incumbent relationship or their current insurer to maintain some form of coverage. But if you're an organization that doesn't have that incumbent relationship and you attempt to approach the marketplace and you don't have these critical controls, they're not even looking past the first page of your application. So it's really important that you're prepared to go to the marketplace, especially if you're a first-time buyer. Factors that are still driving uncertainty are the widespread events, the fear of them, and then actual events. So we talked earlier about how organizations are moving to cloud-based infrastructure. If Amazon Web Service goes down, the cyber insurance marketplace is going to be it's not going to go well. They manage their own risk, they have reinsurance, et cetera, but this is a concern for them that's causing them to restrict capacity, restrict coverage. They're trying to figure out how they can manage that exposure. I didn't mention contingent business interruption earlier, but that is a component of cyber insurance that's available, meaning if you suffer income loss because of a security incident at one of your vendors, that's covered, and that's nearly impossible for them to underwrite, right? They don't necessarily know who your vendors are. They certainly are not getting information from you about what their cybersecurity posture is. And then the aggregation of risk, such as with Amazon Web Service, is a critical concern that the insurance marketplace is still trying to figure out how to handle. And then obviously this increasing sophistication of threat actors, right? We, as a marketplace, drive the implementation of MFA. They figure out how to get around MFA. Uber had an incident a couple of weeks ago, and I understand that it was basically a phishing attack where they had SMS multi-factor authentication, right? So you log in, you get a text, you get a code, and you move on. And basically theirs was saying, "Is this you? Is this you?" And the bad actor just kept pushing the text message to these users until someone finally said, "Oh my God, fine, it's me. I don't want this pop-up anymore." And then it gave the bad actor access to the network. So, we find one solution to one problem and then they're creative and find another. So those are the two things that are still driving uncertainty in the marketplace. So this is a summary of market conditions through Q2. Like I said, we just wrapped Q3, so I can kind of share my personal experience. These are numbers from Marsh US as a practice. So I think that it says that the increase was still around 79%. That's on top of at least 130% average that we were seeing last year. And that's for average clients that have basic controls. Organizations in really challenged industries or those with lacking controls received increases last year of over 300% in many instances. What it says on the far right here, looking ahead, is essentially that the rate increase is decelerating. So we are still in many instances seeing rate increases, but at a lower rate than what we had been. I did personally in Q3 actually secure a few premium reductions for my clients, very minimal, right? So a lot of my clients in the Midwest are manufacturers. That is considered a challenged class, in part because they've experienced significant loss. So insurers essentially pulled out of that space in the hard market. They said, we've had so many losses in the manufacturing space, we just can't underwrite them. So now the available capacity for that industry has shrunk. And then also they just historically had not been investing in controls the way that they needed to. So the insurers that were still willing to write manufacturers were charging even more for them, right? Because then they weren't considered strong risks. So luckily we are seeing that change. and then we're able to kind of get a course correction. So, finally seeing some alleviation of premium for those insureds. The rest of this, I think, is kind of par for the course, right? We're still seeing limitations of capacity. Retentions are still higher than they used to be, but we're finally seeing a little bit more stabilization and sanity in the marketplace, frankly. That said, it is still challenging to qualify for insurance, and it is definitely a harder process than it used to be. So, in 2020 and before that, we essentially could get cyber insurance for an organization in the marketplace with like almost no information. If we had your revenue and your record count, maybe your industry, we could get you 15 options in the marketplace. Now we need an extremely robust application, and then typically multiple communications with you throughout the renewal process as insurers pose questions to us. So it's certainly more of a partnership than it ever has been before between IT and your insurance broker, so that we're most well equipped to tell your story and sell your risk in the marketplace. I am not an IT professional. I'm an insurance broker. So my role is to try to understand what you as the IT professionals are saying, and then understand what the underwriters are asking for, right? And then try to tell that story. So it's considerably more effort for all of us. But when we work together, we are successful. And then the other thing that I think is important for us to think about is also, again, being prepared well in advance of a renewal or in advance of the time that you think that you might be interested in entering the marketplace. So it takes more time for you to gather the information necessary to complete those submission materials, right? Then you should ideally be talking about them with your broker to make sure that you're all on the same page about responses. Frequently, I find that IT professionals are extremely specific with their responses and their interpretation of questions. And we will find that they will say, the question might say, do you have MFA for users? And they'll say no and move on. And then I'll talk to them, and they have MFA for 99.99% of their users, right? And in one specific instance, they don't. I'll use a different example. So I have another client that's a coal mining company. They have MFA for all remote access to their network, except for certain instances of their OT. They checked no to that response, which is a critical control. When I talked to them, they said, well, yeah, we have it everywhere except for in the mines on the switches. Well, if you can get into the mine, right, like there's an additional level of protection there. So it's important for you to certainly be honest. If you are most comfortable responding to a question in a conservative manner, I completely support that, but then provide the additional context, right, so that then the insurer understands that there's a rationale and a reason for that control to be lacking. I think that's probably sufficient here. And then our 12 key controls. So this is the Marsh interpretation of what insurers are deeming to be most critical to have in place at this time. We created this slide probably in the middle of last year, and it hasn't changed. So again, that's a sign of stabilization, right? Insurers are really saying, these are the main things that we need to see. Last year, they would say, we need MFA here, and then a week and a half later, they would say, well, now we need this too. And it was impossible for us to help prepare our clients because we finally have an understanding, right, of where those losses were coming from and what controls would have prevented them. We're able to now, insurers are now able to say, this is really what we need. And then as brokers, we're able to help educate our clients and make sure that those things are in place. Those on the top are really most critical. So MFA, we've talked about, that is really the control that if it's not in place, it's a non-starter. They're not going to look at your application beyond those questions. And one of the panelists earlier today mentioned, if you can only get it in place for your admin, do that. Insurers need to see it in place for everyone. Certainly privileged user access is critical, but so is having MFA for all users. That can be a hard sell, and frequently we find that the executive leadership are those that are most reluctant to implement MFA and be subject to it, but those are also frequently the users that wind up allowing in the bad actor, which is why insurers need to see that it's in place for everyone. So MFA for remote access, for all remote access to the network, regardless of the user, for all remote access to email, and for privileged user access. Those are the 3 linchpins for an insurer to then really review the rest of your application. Endpoint detection and response, that's another yes or no, and is really another critical control. The rest of these are all critical, but there's more nuance, right? So MFA in 3 places, EDR, black and white. The rest of this, there's more nuance in terms, for a variety of reasons. 1, your industry, 2, your size. So privileged access management is critical no matter your industry, no matter your size. But if you are a $50 million organization that's not a tech provider, insurers are probably not going to, insurers are almost definitely not going to expect you to have a PAM tool. If you're an $800 million organization or a $3 billion organization, they're going to expect you to have a PAM tool implemented. So there's a little bit more nuance in some of these there. I'm trying to think of any here that we didn't talk about already because I think we've covered most of them. Cyber incident response planning and testing. I wanted to touch on that as well. There are services available to helping you. So a plug for a company that we work with named Cygnus. They are essentially a cloud-based platform to store your incident response plan. And that people from the organization can then meet in this cloud-based room, basically, in the event of an incident to communicate with one another. That's also a service that an organization that some insurers partner with. So then all of a sudden your insurer can communicate with you in that room as well. So there are resources available for that, which I wasn't sure if anyone was really aware of. Cybersecurity awareness training and phishing testing is another critical control that really needs to be there. Insurers need to see that type of training in place for all users at least annually. Again, we are the most vulnerable aspect of any organization's security, right? You can have all of these tools implemented, but if you're not educating people on how to use them, they're going to fail. So it's really important that we educate our staff. End of life, we've talked a lot about manufacturing, so I wanted to touch on that as well. It is, understood that in manufacturing organizations especially, there are end of life systems in place. They're extremely expensive to replace. Sometimes it's not possible to, realistically. I have a higher ed client that has a research facility, and they have end of life software in some of their research microscopes. And essentially, they would have to completely replace these specific microscopes that do some specific thing, right? So they just kind of isolated those individual microscopes from the network, and that's how they manage that risk. So again, insurers are looking for end-of-life systems to be replaced when possible, or to see a plan to sunset them. But then if that's not possible, to see that you're thinking about that risk and protecting yourselves the best of your ability from the exposure that those end-of-life systems create. These controls are all applicable to OT as well. So insurers weren't really thinking about OT before Q4 of last year, which is also probably another reason that they were still seeing manufacturing losses. It's an area where they are looking for all of these things to be in place, but they're a little bit more flexible. I think they understand that historically OT has not been a part of IT security. And I think we've, as a marketplace, really driven compliance over the last year and a half. Insurers are really saying we need to see MFA, it's black and white, right? But what we're trying to evolve into is an industry, I think, that's looking for more of a commitment to cybersecurity, so that insurers can now say, okay, this end-of-life system's still in place, but there's a plan to sunset, and they're protecting themselves in this way now. So we've talked a little bit too about creating plans. They really like to see that you're thinking about these things and that you have a plan. So something else that I would encourage you to do when going to the insurance marketplace is share information like that, right? Share information about investments that you've made recently and investments that you're planning on making. It could be something as simple as, we have a CISO now, or we've added 5 people to staff this year, or we're going to hire 5 more people next year, right? I think that sharing that information is really important. I'm happy to go into any of these in more detail if people have questions. Perfect, go ahead.
Question on the nuances. So I appreciated your comment about how IT professionals are pretty absolute in their answers. And in the cybersecurity awareness training and phishing testing kind of category, most companies have it or will have it, and they contract out to do it. But the compliance to be able to say you're 100% is kind of impossible, right? So, and if it's impossible, what's going to happen are firms are going to game the system to kind of get to that number to say, yeah, we're compliant. Any nuance in that you can kind of maybe talk about? Because I agree with you, obviously, the people are the biggest vulnerability that we have, and we want to educate them. But people will go out there and maybe say, yeah, we've got training, we told we have training and everything like that, but obviously there's an efficacy of the training, right?
Yes.
So can you just maybe talk a little bit more about that, of what you've seen in this space of the training part of it, what works, what doesn't work, things like that?
I'm going to answer your question with an initial comment that this is still very new and it's quite frankly frustrating. The insurers have not defined any of these terms either. So we'll say, again, you're an $850 million organization, you need a PAM tool. Okay, well, what's a PAM tool? How does Beasley define a PAM tool? They don't. So to your point, right, what is cybersecurity awareness training, and is it possible to say it's 100% implemented? I think it's completely reasonable for you to say, no, I can't in good conscience say that this is in place 100% of the time. And then you provide that context, right? On the same hand, I think another person in this room might think of that question in your exact same situation and say, well, yeah, we give it to everybody. And the question is, are we giving it to them? So I'm going to say yes. I really think it comes down to a matter of personal interpretation at this point, unfortunately. But respond to the best of your ability and provide additional communication. There was something else I wanted to touch on there around PAM or education. I'll come back to it. I don't know if that answered your question.
I mean, I think it affirms, right? And I think most of the times what we do is we answer the question, whether it's from a potential customer that we have, because that tends to be a customer question they might ask, or our internal approach with insurance. And it's truthful. We have it. We have times when we train people, but if we actually look at the number of people that go through the actual training, that's a different answer.
Yes. Well, and that gets back to the question of compliance versus commitment to security, right? If they're asking a question a certain way and you can say you're compliant, great. But you also know that you want to be committed to security and you want that education to be effective. So, yeah, it's an imperfect system. Yes?
Question, Lindsay. Are you seeing any kind of consistency? You mentioned there's no definition of these things, like you brought that up. We see it as a service provider trying to help businesses get ready for the applications, and the requirements are so different. Do we see anything in the industry where we're going to have some consensus on this is where we need to go?
That would be fantastic for all of us. So I personally am invested in, again, as a corporate team lead, I think that these changes and the fact that they've been so ill-defined is extremely challenging for corporate organizations. It's impossible. I mean, larger organizations had the benefit historically of more investment in this space, right? So they were more prepared for the market changes. Middle market organizations had never had to have these controls in place before. I mean, there's regulatory concerns, but in general, to qualify for insurance, and then they were able to just use cheap insurance as a backstop. All of a sudden, they weren't able to do that anymore. And so I think the insurance marketplace is still trying to grapple themselves with what they think is most important and what qualifies. But then we as a broker are trying to drive that, standardization, if you will. But it's a really immature marketplace. This all just happened in the last 18 months. So I think for us to get to a point where we have like the equivalent of an Accord app in a property insurance, we're far way away. But it is something that we're working on. Sure, hi.
Lindsay, in the kind of lack of clarity around the requirements and the questionnaires that they put out, have you seen them leverage that as a way to deny claims?
Ooh, fantastic question. This is one of our biggest concerns, I think. I believe that it's been in the news if I'm not mistaken, that an insurer is attempting to do just this, where an insured said that they had MFA, brought a claim, they didn't have MFA, and now the carrier is trying to say, look, we don't want to pay this. That is a pretty challenging position to take as an insurer. I think that there's a little bit of a game of chicken, frankly, from insurers, where they're saying, well, you go first and see how it goes, right? And that's still playing out. And I don't know that there's a solution for that right now either, which is why I personally always encourage my clients to respond to those questions as conservatively as possible and then provide that context. Any other questions? Go ahead.
What other alternatives besides yourself on meeting the MFA criteria? It sounds like company-wide employees need that MFA to get insurance.
I'm sorry, you're asking what are other alternatives besides text messaging? There's hard tokens, which are kind of retro, but I think they're actually more secure. And then there's also something called, I think it's called Passkey that's coming out. Am I right? So yeah, it's a software solution. Right. Oh, right. That's on your phone. So, but yeah, hard tokens are a possibility. You guys can also feel free to chime in if I'm missing something here. Am I good so far?
I mean, there's a bunch of older technologies that are still around where folks use like USB keys and there's a number of ways to really do it. I've seen even with Duo from Cisco, right? We acquired Duo some time ago. I think you can use mobile phone or an email account. You can answer, basically click accept from your email account and it'll authenticate you that way. So there's a number of ways to really do it. And I think that what's interesting for me hearing her talk is that there's a lot of things that we offer, Rockwell and Cisco offer, get someone certified. And there's a lot of different ways to sort of go about what they're asking of you, right? So I think it's a good conversation to have, maybe with your technology team and with the insurance company at the same time, and say, if we did this, would that satisfy your need to get us insured?
Absolutely.
It needs to be an open dialogue.
Yes, and it's going to keep changing.
Yeah, it will change.
Yeah. Something, actually, sorry, just real quick, that you had mentioned earlier that, actually, I'm really glad I came here to meet all of you, but I learned a lot from all of your presentations as well. But the concept of working with one vendor, I think, is also interesting. We've seen a lot, again, of organizations trying to comply with these requirements so that they can maintain cyber insurance, and it's just a patchwork approach. They're just buying things off the shelf that are cheap that they can get easily, and they're maybe not that effective, or they don't work together as well, and there's gaps. So I'm hoping now that the market is stabilized, these organizations that have unfortunately taken that approach and hopefully are more secure than they would have been otherwise, but that they're taking the opportunity now to kind of review and maybe make a more thoughtful approach.
I would add, I don't think that's going to get any better. The reason I say that is because, well, I think, the good news is there's a lot of merger and acquisition going on in this space, especially on the industrial side. So the IT security side has had somewhat of a stable position for some time. Like Cisco knows who our competitors are. It's very black and white. We know who we're competing against. When you go to the industrial side, there's all kinds of startups over there, right? Because there was really, the industrial security piece was really handled in a different way, right? You had a firewall and you did your basic things and you're set. Well, now that they're getting into cloud security and multi-factor authentication and all these different things that are going on, the startups are just everywhere.
Mm-hmm.
So what will happen is some of them are going to operate on their own and do fantastic, and Cisco's going to buy half of them, or Palo Alto's going to buy half of them. So you're going to end up with these heterogeneous environments because of acquisitions. And I mean, there's no question that, it's a race right now to secure IP for us, for Cisco, right? We're just trying to get as much technology as we can because we're trying to convert as a software company. And that's what, if you really boil it down to a lot of technology companies are trying to transition to software subscription-based revenue, right? And that prevents risk with their supply chain problems. There's a lot of reasons for it, but if you really back into it, it's going to end up still kind of sliding around a little bit because of acquisition and mergers.
Sure, interesting. But I also think, there's a section that I'm hoping that we can share with you that I'm not going over, but where basically someone on our team took these 12 key controls, gave a really rough explanation, and then a list of vendors that provide services that we're aware of. We are not recommending them, but we are saying these are insurers or vendors that we're aware of, right, that insurers have said are qualified, essentially. So we'll hopefully be able to send that out afterwards. Did you have something too?
I was just going to say that this, I like this slide. In the way you might be able to apply this if it's not for insurance, is kind of a good overall guide for a self-inspection checklist, if you will. And if you just take each of those categories, I really like them, and go and say, okay, these are, where are we on these? You can, looks like you're putting up a, you know, a stoplight chart.
Yes,
And
exactly.
that I think would be really, you know, is a good takeaway from today.
Thank you. So something that we offer that I really like, and I'm not attempting to sell Marsh outside of the fact that I really do think that the Marsh Cyber Self-Assessment is pretty fantastic, it's a lengthy digital questionnaire that we then measure against the NIST framework and provide you a report against the NIST framework. And then we also now have this 12 key controls report where we do a red light, green light, yellow light against those 12 key controls based on your responses. And then that helps us hone in our focus from an underwriting perspective to prepare you for the marketplace, but then to your point as well, hopefully to help you also identify opportunities for improvement. Ideally, these are all things that you're aware of being issues, but sometimes, you know, it's new information or helps put it into a different light. So I think that this is really helpful. We historically had not been asking corporate clients to complete the self-assessment because it's then also used as an application. And I feared that it would be capturing information that would show my clients in a negative light in the marketplace. And I didn't want to make my clients go through more work to have worse results. But I now am finding that, one, again, clients have gotten the message and they've made necessary improvements, so the basic controls are there. And where there's more nuance and specificity, underwriters aren't really penalizing you for it. They're saying, that's fantastic that they're going through this effort, and maybe we wouldn't expect an organization of this size to have this anyways, or perhaps you see some red on there that you don't have currently addressed, but you're able to then provide context around it in an addendum to the materials. So then the underwriter knows, okay, great, they don't have this in place now, but they're thinking about it. So from a marketplace perspective or a preparation perspective, I think this is really helpful, but then again, you get two really nice reports that help you identify opportunities for improvement in your roadmap. Yes?
The Clarity is out here, they provide like a report of their network assessment. So some software like that, is that considered like the cybersecurity hygiene, they provide a number, like some provides 100 or something like that. Can that be used by an end user to demonstrate that they are practicing good practices and things like that while they're applying or to use their insurance?
Do you mean like a BitSite report? Or
It's like a software, it monitors your network actively, and at the end of the day, it provides a hygiene report and score.
So I haven't had anyone submit something like that. We do, insurers are using BitSite security scorecard and similar scans in their underwriting process, so I'm not sure if that might be something similar. But it's external only. So BitSite, right, is just looking at your external assets, identifying visible vulnerabilities, and then insurers are saying you need to address these. But it sounds like maybe you're looking at something that's more...
It's more to prove that you are taking good practices and into account, and it's never a 100% score. There's always some
Correct.
vulnerabilities out there. The closer you are to the high score, that means that you are taking some precautionary measure. Does that account for reducing your cybersecurity insurance rate?
Oh, decreasing rate is a whole other ball of wax. So nothing, again, in our industry is standardized, be it controls, coverage, or premium reductions. So it's a holistic approach at this point, which is good and bad, I think, right? So I suspect that there are questions on most applications or in the cyber self-assessment that ask things like, are you doing vulnerability, testing, are you scanning, et cetera. They don't necessarily need to see your score. It's just nice to know that you're doing those things. From a holistic perspective, as your security posture improves, ideally your coverage will improve and then your premium will reduce, right? but we're not like property insurance where I understand if you have sprinklers, you get a discount of X, right? It's very mysterious still. We don't even know what their rating metrics are. So again, like I don't think there's a ton of insurance people in here, but for workers' comp, there's something called an XMOD, which is like all insurers use it. Clients know what it is. It's exactly how your workers' comp premium is calculated. There's nothing like that in the cyber insurance place. I'm just going off on a tangent now. And I've also completely lost track of time, so feel free to come grab me when you're ready. Did you have a question?
Yeah, well, I was just going to kind of touch on, I mean, for the most part, I'm most curious following the whole NIST framework. And I guess my question is, with that, you can get your SPRS scoring, kind of what Yogesh was kind of referring to, was with that, you get a scoring based on all the credentials and everything you've gone through to help secure your network. Is that something that insurance companies are going to start requiring to have something like that, or having you guys perform an audit annually, something like that that's going to be forced upon?
So at this time, so this goes back to the question, I think, of are insurers declining claims because you interpreted their question and responded differently than they intended? I mean, I think there are some of my peers that feel like we really need to have like an on-site underwriting exercise where it's just, okay, you really need all of this detailed information and the questions are imperfect and the way people respond are imperfect. Come out, again, like a property insurance underwriting meeting and look at our network. And then the questions aren't even there. It's just you're performing the underwriting on site. I don't see that being possible in the near term. The industry is so immature, it's impossible to hire and train talent fast enough to even do what we're doing right now, let alone to actually have people come out on site. But I think that there's clearly room for improvement in the process, right? I answered your question with more concerns. Name of the game. Any other questions on controls or process? Yes?
See, I didn't see on the list of 12 earlier penetration testing or things like that. I've seen that on many applications.
Yeah, we mean that in here. These are really high level, right? Where would that be? Network protections? Yeah, this middle one here. Several of these could mean various things, right? Actually, privileged access management, something else that's expected for an organization of all size, is that administrators have separate accounts for their administrative work. So when they're just checking email, they're using their user account. When they have administrative duties or functions to perform, they then log into that account. And then obviously the principle of least privilege, right? So that you're not giving everyone the keys to the kingdom, you're kind of titrating as necessary. That's also a challenge for executives, right? Or universities for professors. But it's really critical because, again, so something else to consider when thinking about how to approach the marketplace is the two concerns, the main concerns or the ways that underwriters are thinking about your risk are in terms of preventing frequency of events and severity of events. So a lot of these controls, some of them do both, right? But like having multi-factor authentication to prevent or to protect your remote access, that's a frequency concern. They're saying if you have MFA to protect remote access, you're less likely to have an infiltration to begin with, right? Whereas protecting your privileged user accounts, that's a severity issue. If a user gets into the Marsh network under my name, they could damage some cyber insurance files, but like not much else, right? They're not going to be able to get into any other servers. They can't move laterally. I'm not an admin, right? And so ensuring that your privileged user accounts are secured, that's a concern of making sure that the severity, should you have someone access your system, is reduced. There was one other one I wanted to talk about with frequency and severity there, but I'll come back to it. I forgot what it was. I'm having so much fun. I hope you are too. Any other questions? Nope. Okay. I'll try to think about what that other. Oh.
In the logging and monitoring network protections there, are Are you seeing them interpret that as requiring a SIM as well?
In general, yes, we have seen insurers start looking for that. Yeah. I can go through them more. All right, thank you. This is basically, I mean, the end of my slides. But I'll just see what else I had. That was it, yeah. Any other questions? All right, well, thank you. Appreciate it.